All right, guys, welcome back to another video. Today I have an extra special one for you. We have a lot to go over. We have the war in Iran. We have oil prices surging. We have AI stocks being crippled for a very specific reason, which I'll get into later. And we have what to do with our savings, where to hold our cash, where to hold our investments and our equities. I'll be answering all that for you guys here today, whether or not to hold on, whether or not to sell. Let's get right into it. So first up, guys, I just wanted to say that markets are facing a massive macro storm. If you're holding digital assets or high growth tech stocks right now, the ground's shifting beneath our feet. Crypto's holding pretty steady, but AI stocks just had a huge plummet, and I'll get more into that in a second. But first of all, guys, the geopolitical conflicts, they're pushing crude oil prices higher and higher. There's no effort to really be made right now at all on either side to come to some sort of conclusion on this. There's a massive three-front battle taking place. With that, the Federal Reserve inflation targets. Second, the U.S. Senate just unleashed a highly debated 616-page update. We'll get more into that later. We'll have maybe a little bit of a breakdown on that. And third, guys, the institutional capital is quietly choosing its winners, and losers are being swept from the markets. So in this video, we're connecting all these dots. We'll be breaking down exactly why high oil prices are squeezing tech valuations, what the political battle over the Clarity Act really is, and how that's going to affect your guys' bag and what you need to do next. So if you guys are interested in that, stay tuned and like the video. But yeah, guys, let's start with the macro picture because the macro engine really drives the entire vehicle. Ongoing regional wars and escalating tensions across major trade corridors continue to disrupt the global supply chains. When cargo ships have to reroute for oil infrastructure faces localized threats and shipping costs skyrocket. That's why the global oil supply shrinks. Why does this matter to crypto or AI stocks? To you guys, to the investor, you might be asking. And that's because of energy costs, guys. They're the baseline for the entire global economy. So spikes in crude oil drive up costs. Higher energy costs mean sticky inflation. So as you can see here are the oil prices right now, guys. You can see that they were kind of dipping down a little bit. Then they ended up skyrocketing again, and that was due to the current, speculatively due to the recent strikes on Iran from the US. So we kind of broke our own code there, which is making everybody very scared. But when inflation remains stubborn, it puts the Federal Reserve and other central banks in a massive corner when they cannot aggressively cut interest rates if energy-driven inflation is moving higher. Instead, they're forced to keep interest rates for even longer. Guys, if you don't know, the Fed's and the current Fed right now, he obviously wants to cut. He's not hawkish. You could tell by his speeches he's not hawkish. He came across that way. I'm not sure what his end game is there. We'll get more into that later. But there's something going on there, guys. I think they're secretly going to do rate cuts soon. Here's the exact mechanism that hurts your portfolio, though. Okay, we'll get into that right now. High interest rates mean the cost of borrowing money is expensive. Okay, when capital is expensive, institutional investors pull back from the high-risk, long-duration assets, just like AI stocks, like tech, things like that, especially like crypto. Specifically, altcoins are getting beaten right now because it's very risk-off mentality. Additionally, higher energy costs directly hit the bottom line of the exact companies we love. AI data centers consume massive amounts of electricity, and higher oil prices push those electricity grid costs, threatening corporate earning margins. If you want to know when a sustainable bull run returns, watch the energy sector, guys. But until oil cools off, risk assets and risk-on assets just aren't it. I wouldn't be personally investing in any of these things. I am holding them. But right now, I would just really see where we are on that. Guys, more about the Clarity Act, okay? A little bit of a deep dive on this. Now, let's move on to Washington, okay? Where the legal landscape for crypto is undergoing a massive shakeup. Senate Republicans recently released a consolidated 616-page draft of the digital Asset Market Clarity Act, merging bills from the Banking and Agriculture Committee. Okay, and what this means is basically the main objective of the act is pretty simple. is to establish clear federal rules and officially divide jurisdiction over digital assets between the SEC and the CFTC. For years, regulation by enforcement has plagued the industry, and the Clarity Act seeks to end this, guys. This is very important for altcoins specifically. I think Bitcoin, genuinely, in my opinion, is going to be fine either way. I really do think so. But altcoins need this sort of stability to be able to pump to where they need to be. However, in a major roadblock, a wall you could say, Congress is heading into the August recess, guys, and the Senate leadership has effectively shelved the bill, prioritizing defense bills and federal appointments instead. And guys, if you don't know, Trump is trying to enact a cease on the recess to force everyone to stay and vote, which made Ethereum a little while ago, as you could see here, pump a little bit, but then it dumped again based on recent news. The bill is stalling for 3 reasons. Okay, first of all, a banking industry fight over stablecoin yield. Second, a major disagreement on how anti-money laundering reporting should apply to decentralized software developers. And third, an intense political standoff over newly added government ethics title. Okay? The revised bill still falls to adequately address conflicts of interest stemming from President Trump's existing financial stakes in cryptocurrency industry. That's by the Transparency International US. Guys, I think that's ridiculous. He's already signed saying that he's not able to therefore in the future as president take crypto gains. I don't know what the holdup is for this, to be honest with you. But what does this mean for you guys? Prediction markets show that the odds of the Clarity Act passing into law in 2026 are sitting around 50%. Because it's delayed, the market remains volatile and uncertain. However, the silver lining is that the SEC and CFTC previously issued joint guidance clarifying major assets like Ethereum, Solana, and Chainlink as digital commodities, guys. That's extremely important. And that means the top tier layer ones have a temporary shield. But the thousands of smaller, more speculative coins, guys, you know I love them. I love my Shiba Inu. They're at regulatory risk, guys. They're at regulatory risk while Washington plays out in these politics games. But yeah, guys, next, let's just do a quick crypto analysis here. Let's take that regulatory and macro knowledge and look directly at crypto charts. Right now, as you can see here, based on this graph, Bitcoin is hovering in the low to mid $60,000 range. Volume across primary exchanges have been cooling off lately. This low volume tells us that retail traders are fearful, but institutional giants are not panicking, guys. That's why it's been so steady here. Look at this. As you can see, there's a bullish divergence here. I'll pull up the RSI real quick as well so you guys could see that. But in fact, honestly, MicroStrategy recently took advantage of the market dips, purchasing another $2 billion worth of Bitcoin, guys. $2 billion worth of Bitcoin to bring their total holdings to over 64 billion. I know there's a lot going on with MSTR, a lot going on with STRC, guys. But I promise you guys, when you look at the math, it works out. They're going to pull through. When the biggest corporate holders are buying the dip, you shouldn't be panic selling. If we pull up the chart for Ethereum, I'll do that really quickly right now. See, we see this strong relative strength. And why is this, you're asking? Because the underlying mechanics of stablecoins rely heavily on the Ethereum network, guys. And the Clarity Act's focus on defining a stablecoin framework makes Ethereum a massive, fundamental winner long-term, guys. It's probably my top crypto right now. If I had to bet on anything, it'd be Ethereum, besides Shiba Inu, obviously. That's been pumping lately, by the way. You guys should look into that. I just made a video. I'll try to link it right here if I know how. I'm just getting into YouTube now. I'll link it right here, guys. Shiba Inu is exploding. It's skyrocketing. It's outpacing every crypto right now. And I don't know why yet, but I'm sure we're going to get some news soon. But yeah, guys, just a little strategy tip as well. Don't chase the green daily candle, guys. In a market plagued by this extremely high volatility and all these macro fears, we're bound to see shut-ins, sharp liquidations, just like we received on Bitcoin and Ethereum lately. Hasn't been as bad since October 10th in February, but guys, it's still really bad. But use those moments, guys. Identify the 200-day exponential moving average on your charts. It's seen here in blue for assets like Bitcoin and Ethereum and the top tier layer 1 protocols, and set your limit order slightly above those key support zones, guys. That's what I've been doing. I've been dollar cost averaging. I think that's the only way to beat these emotional trades, these emotional traders, and avoid low utility meme coins, guys. They're just probably not going to get past the point where they need to be this next bull run. I think maybe like Doge and Shiba Inu, something with like above maybe a couple $1 million market cap, or excuse me, $1 billion market cap, I think would suffice. But the speculative money does tend to leave those tokens first, guys. So just be careful about that. But switching over to the equity markets, guys, let's look at the hot AI stocks right now. That's what you guys are here for. I have a lot of degens in here. You guys want to make money and you want to make it fast. You want the hot stocks. Let's go over that real quick. The market's undergoing a massive rotation right now, guys. Investors are moving away from speculative AI microcaps that promise future software and are moving directly into hard AI infrastructure. Look at companies like, I don't know, NVIDIA, Palantir, Micron. I'll pull that chart up really quickly. Despite the broader tech market experiencing a downward pressure from high interest rates, these infrastructure leaders are holding their major support lines, guys. They're holding. You can see right here on the 200 daily moving average for Micron, they're holding. The reason's simple. Enterprise demand for these custom silicon chips and advanced data centers and these sovereign AI software models is not slowing down. Large corporations cannot afford to stop spending on AI development if they want to remain competitive. They just can't do it. And they know that, we know that. That's why I've been DCAing into these as well, and especially taking advantage of these last dips. Guys, if you don't know why that last dip happened, maybe I'll make a video about it soon, but to keep it short, there's a lot of manipulation going on, and people are quite literally purposefully liquidating each other in order to buy more shares. However, you must watch the energy factor we discussed earlier, because data centers are incredibly power hungry right now, guys. As oil and global energy prices rise, the operational expenditure for these massive AI server hubs go up, which can squeeze the short-term profit margins. So guys, the strategy here, if you're looking to deploy capital into AI stocks right now, do not buy companies trading at absurd price to sales ratios that don't have real revenue, guys. Focus on revenue, focus on earnings, focusing on the picks and shovel industries and the hardware manufacturers, the power infrastructure providers, and the cybersecurity firms protecting the AI networks. Wait for macro news or inflation reports to cause a broad market pullback and build your position on those red days, guys. It's going to go up. Build your position on red days. Don't chase the hype. It's not good. But yeah, guys, to summarize this all up, basically, first of all, keep some dry powder, guys. Keep some cash. These are very highly volatile situations, highly volatile markets. We don't know what's going to happen next. So first of all, keep some cash ready to buy some of those discounts. Second, flight to quality, guys. Fly to Bitcoin, the big macros, fly to the big AI companies. Don't look at the speculative meme coins right now, guys. We're on a risk off market. And until those oil prices go down, we're going to be there for a while. And then third, guys, focus on AI hardware and infrastructure, not the speculative hype, guys. We don't want to focus on speculative hype, especially not for the software industry right now. I don't believe it's going to turn out well. But now I want to hear from you guys. What's your exact portfolio strategy right now? What are you guys buying? What do you think about what I said? Let me know down below if you disagree with anything. I'll be happy to look into it. But yeah, drop your thoughts and your specific portfolio questions in the comments below. I read all these guys. I try to reply to as many as I can. This is a new channel, so I'll try and heart everything that I can. And if you found value in today's deep dive, do me a quick favor and just hit that like and subscribe button, guys. I do videos weekly. Turn on the notifications. It just tells the algorithm that I'm a human and you guys like my content, and it'll push it out to more people. Yeah, guys, but thanks for watching. Protect your capital, guys. Protect your capital. It's the most serious and awesome thing you could do. And yeah, I'll see you guys in the next one. Peace out.